Hello dear students, so this is the solution of the test on residential status and the incidence of tax as per the residential status. So this was question number 1, in which Mr. X and Y created an association to fulfill the contract received from DMRC, and the contract was received on 1st January 2019 and is completed by 31st January 2020. In this case, you have to determine the previous years and the assessment years for the purpose of determining his income. And I must tell you that none of you has attempted it correctly. Okay. So in this case, first you have to identify the first previous year and first assessment year. And after that, you have to identify the subsequent previous year and subsequent assessment years. So in this case, since the contract was received on 1st January 2019. So first previous year will start from 1st January 2019 and it will end on 31st March 2019. First previous year. Okay. Starting from 1st January 2019 and ending on 31st March 2019. Remember, I told you that previous year could be less than 12 months in case your business is started during the year. Okay, so in this case it will be 1st January 19 to 31st March 2019, and in that case the assessment year will be 1st April 2019 and ending on 31st March 2020. Okay, so this was your first. Regarding the second will start from 1st April 19 previous year and ending on 31st March 2020. But in this case, subsequent assessment year will also happen to be the same as your previous year, and this is an exception to the rule in which the income of previous year is not taxable in the immediately following assessment year. Rather, it will be taxable in the same previous year. And in that case, the exception was when the income of body is formed for shorter duration. So in this case, the contract was for shorter duration and it was completed in the previous year, 1st April 19 to 31st March 2020. So in that case, we will not wait for the subsequent assessment year. Rather, we will tax the income in the same financial year, in the same previous year at the rate of the assessment year, April 19 to March 2020. Okay, so none of you have attempted it correctly. Okay, but I have given marks 1 for those who have done this first part correctly. Okay, so this is the second question. So Mr. X is a citizen of USA and comes to India every year for 105 days to attend workshop of art and living. He has been coming to India since 11-12 and we have to calculate his residential status for the assessment year 2021. And I must say that most of you have attempted it correctly. For assessment year 2021, the residential status is ROR. That in every case, only the condition B is satisfied, that the person is staying in India for a period of more than 60 days, that I have whatever I have given to you. But there is an amendment to this rule which I'll share the PPT with you guys later on. In this case, the 60 days has been amended to 70 days. So that I'll give a separate session in which I'll just provide you a quick review about all the amendments which happened in the residential status. But till that time, since it is greater than 70 also, so it is 105 days. So rule 2 is applied, and rule 2 says that it should be in the same financial year, it should be greater than or equals to 60 days, and for the remaining 4 years it should be greater than or equals to 365 days. So till financial year 15-16, he was satisfying the basic condition, so he was the resident. But regarding the ROR or NOR status, he was ROR only in the financial year 19-20. Prior to that, he was NOR, since in the previous 7 days the person should have stay at least greater than 730 days. So in that case, your answer should be ROR, which most of you have attempted correctly. So now this is question number 3. Mr. X qualifies as a CFA in July 19 and gets a job with Xyz Limited in Australia. He leaves India on 2nd August 2019. Calculate his residential status. So in this case again, I must congratulate you all that most of you have attempted it correctly. Since the person is going on employment outside India, his purpose is that he wants to leave India for permanent basis, that he wants to get an employment abroad. So in this case, the basic condition B will not be applicable and it will be calculated only on the basis of your first condition, that is his stay in India should be greater than or equals to 182 days in the previous year. But since in this case it is lesser than that, you have to calculate month wise. So total is 124 days that he stayed in India. So in this case he is non-resident. Okay. Now this is question number 4. Mr. X is a Karta of HUF which is located in Mumbai. He took all the decisions of HUF from India and later on he suffered from cancer, and for that he has to go to Australia on 20th May 2019, and he left India for the first time in his life. Before leaving India, he delegated his powers to Mr. A. Mr. A, there is a missing son here. His powers to his son Mr. A. Mr. A has taken some decisions in India, some decisions in Nepal. So in this case also most of you have attempted it correctly. In this case Mr. A will be the de facto Karta and he has taken some partial decisions in India and some in Nepal. So regarding to the HUF is the resident of India, and regarding the NOR or ROR status, we have to check the residential status of de facto Karta. And in this case Mr. A has never leave India. He was always in India. So in this case the residential status of HUF will be ROR only. Okay, simple. Now this is question number 5, that X received the following amounts and we have to calculate the total income if he is ROR, NOR and NR. And I have noticed that many of you have not been able to calculate the correct answers in all the 3 cases. So this was 6 marks for each cases. Okay. So first part is income from salary in India from Xyz Limited. So since the income is from salary, so it is deemed to accrue or arise in India. So this is Indian income and this will be chargeable in all the 3 cases. Second one was dividend from an Indian company received in USA and spent there. Even if it is received in USA and spent there, since it is dividend from an Indian company, it will be deemed to accrue or arise in India. So it will be Indian income and chargeable in all the 3 cases. Third one is income from house property in Pakistan and received there. It is not the property in India, it is in Pakistan and the income is also received outside. So in this case it will be a foreign income. Okay, foreign income will always be taxable in case of ROR, not in NOR, because NOR mein there are 2 conditions regarding to the business and the profession. So house property is nothing related to any of them. So NOR के case में भी it will not be taxable. NOR के case में तो होती नहीं है foreign income. Then next is income from business in Calcutta controlled from USA. Although the business is in Calcutta, but it is controlled from USA, so it is a foreign income, not an Indian income. Okay, you must have go through all the incomes deemed to accrue or arise in India. In that particular case, there is a one thing that is called the business connections. Okay, so since it is entirely controlled from USA, it is a foreign income. So foreign income is chargeable to tax only in case of ROR. NOR के केस में business आता है, but since it is controlled wholly from USA, तो यहाँ पे भी it will not be charged. Okay. The third one is $7,000 earned in USA during previous year 1670, but brought to India during 1920. So this is the case of remittance. And remittance, क्योंकि पहले जब actual receipt हुई थी वो उस time charge हुआ होगा, so remittance is never chargeable to tax in our act, so it will not be chargeable to any of these. Then received 2,000 from friend in USA on marriage as a gift, and I have already told you that gift is exempted. I have just give you a brief that gift is exempted up to 50,000, but I have told you already that in marriages these are fully exempted, so nothing will be taxable. So in this case, the total will be 1,30,000, 90,000 and 90,000. Whomsoever has get it correct, I have given 18 marks. In case ROR figure is correct, I have given 6 marks. In case NOR, additional 6 marks, and NR, additional 6. So I have checked each column respectively, and whosoever has attempted it correctly, I have given full 6 marks. Okay. Then this is question number 6. That Mr. X received the following amounts during the previous year, and these were the amounts. So salary accrued and received in India, very simple, Indian income chargeable to all. Profits of a hotel business at Paris. Since it is a business which is there in Paris, so it is foreign income, and foreign income is only chargeable to tax in case of ROR. NOR के condition में भी business is entirely in Paris, तो nil आएगा, यहाँ पे भी nil. Dividends from A Limited declares in USA and received in India. It is an Indian income because the income is received in India, so chargeable to all three. Then income from transfer of a long-term capital asset situated in India. Again, in case of any capital asset situated in India, so any kind of income will be considered as deemed to accrue or arise in India, so it is Indian income chargeable to all three. Then interest on debentures of a foreign company which was received in India, again received in India, so Indian income chargeable in all the three. Then interest received from Mr. Y, a non-resident, on a loan provided to him for a business carried in India. So this is the case of your royalty, technical fees and interest. So in case any amount is received from non-resident, but that amount is used for a business in India, it will be considered as deemed to accrue or arise in India. So this is Indian income chargeable to all three. Then royalty received in Germany from Mrs. K, a resident in India, for technical services provided for a business carried on in Germany. Okay, Indian resident से ले रहे हैं, but business is entirely going to be happen in Germany only, so it is foreign income and chargeable to ROR only. NOR नहीं होगा because it is entirely in Germany. Then fees from an Indian company carrying on business at London for technical services rendered at London, having been directly deposited by the company in his bank account in India. This is foreign income. Why? Because this is the technical fees which is provided by the resident Indian company. किस लिए कर रही है? For a business at London. और जो भी provide कर रही है services, this is only जो technical services provide हो रही है, this is entirely for the business established at London. और Indian bank company क्या कर रही है? Account में directly deposit करा रही है उसके Indian account में. So this will be considered as a foreign income, not Indian income, क्योंकि उसका जो अकाउंट है वो इंडिया में है, बट इट इज अ नॉन रेजिडेंट अकाउंट. अगर कोई नॉन रेजिडेंट का इंडिया में अकाउंट है तो इट विल नॉट बी कंसिडर्ड एज दैट इट इज रिसीव्ड इन इंडिया. ओके, उसके अकाउंट में डिपॉजिट करा रही है, ही कैन जस्ट डायरेक्टली विड्रॉ दैट अमाउंट फ्रॉम हिज ओन कंट्री, क्योंकि क्या है, इंडियन कंपनी लंदन में एक बिजनेस है और वहां से कोई सर्विसेज प्रोवाइड कर रहा है जिसको वो पे कर रही है. Okay, so this will be considered as a foreign income and it will be chargeable only in case of ROR. So these are the sum of your total, and in case if all these are correct, I have given full 24 marks. If case 1 is correct, I have given 8 marks. The other one is correct, then I have given additional 8 marks and 8 marks as well. I hope this is clear, and in case of any doubts, please let me know. Okay.